Ladies and gentlemen of the crypto space, we're live at 11:29 a.m. on a Thursday, May 13th. I like what I see today. I think the market looks good. We're going to look over the market caps on CoinGecko, see what the dollar-denominated price action is doing. We'll start with that, and then we're going to look at macro. We'll look at the macro financial system, particularly the major indices. We'll get a sense of really, actually, this is a critical point in time. Um, Bit of a deciding factor going on, and market actors, market participants, and not just the crypto space, the world is trying to figure out what's going to play out. And I like to denominate my indices charts, indice, indice, like fungi, indici charts in M1 and M2, because what has occurred in 2020 was a distortion of money supply, and that is like that has a significant effect, a ripple effect. You don't see that instantly. And in fact, you don't even see that slowly. What happens is it's like moving an oil tanker, but think of an oil tanker 10 times the size of any oil tanker you can imagine. It takes forever to move. It takes forever to readjust and reorient and change directions. And that's, all of this time since March 2020, and just the constant printing or QE and reserve shell game that the Fed's played. Um, is barely even starting the process. And, that kind of shows, at least in the technical data, which we're going to dig into. Macro financial tipping point. What does that mean? What does it mean? Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it up to the main screen and see who's in the stream. Gia June's in the house. Tyson, a pleasure. Dean, have you bought the dip? No, because I never sold to have to buy the dip. I started elaborating on my narrative modification yesterday and the day before, and I'm happy to talk about that again. I want to show you the charts for. I'm just going to stick with the S&P for time brevity purposes, but I also want to hit on that. So those are the two things we'll focus on today. Sir Joe in the house, Alex, always a pleasure. Josh, pleasure. FM, TrueBit will scale F computation. Do you think it has a good narrative? I don't know about TrueBit. What I know is liquidity and monetary velocity. And as of right now, there's only one asset that I think is on a critical threshold of significantly climbing the market cap ladder, and that's Polygon. It has critical mass liquidity, and that did exactly what we're seeing it do, is creating the dev FOMO and the project supporting, the project supporting, the project supporting. All you have to do is follow the Polygon team on Twitter, and you'll see it's project after project after project. And you're seeing the projects on stuff like Phantom and Solana and Cosmos and Avalanche and Polkadot, but they don't have the critical mass liquidity. And if you start spreading around to all those projects, you spread too thin. So, yeah, sure, it would be a complexity if Aave and Curve uh, launched on another EVM compatible chain like Phantom. That would introduce a complexity, and then you'd have to choose. But even if that was the case, and you had two platforms, monetary networks, about to go exponential, I'd probably choose one or the other. It's okay if one outperforms and one doesn't. What's pertinent is knowing the systems that are about to significantly experience a drastic fundamental shift in performance. Winter in training. Good morning, Jason's in the house. Always a pleasure, brother. Evergreen, the band. Sonny's in the house. Always a pleasure. Noah, you called it. Said Bitcoin was looking very bearish. Yeah, well. Um, this isn't bearish, really, and the price is irrelevant. Price is irrelevant to me at this point. It's the story, and the story it isn't changing. It really isn't changing, guys. The price could be 40,000, 30,000. The story doesn't change. People are getting desperate. The financial system is pretty deficient. Money's not moving. Velocity's at a standstill at the M2 level, and it'll probably go vertical. As I said, it's a 10 times the size oil tanker, and it takes time to reorient. They pretty much liquidified the entire system. So at some point, it's likely the case that M2 velocity is going to go vertical. And if M2 velocity goes vertical, what do you think happens to the crypto space? I mean, everything points to just the crypto space just outperforming everything. What's your take on Elon disabling Bitcoin payments? There's no reason that he should have ever accepted Bitcoin payments. And the only reason I think they started accepting it was they don't necessarily understand, the macro perspective of how these systems work. Him focusing on Doge. I mean, Doge is just a catastrophe in the making. It already is a catastrophe, down whatever it is, down 35%. That's a tragedy, guys. People are getting destroyed. Put 100 grand in there and you're down 35. What a tragedy. I'm sorry. So all of this shit is money. All of this shit. The difference between money is whether it retains value, and then the difference between these monies, these currencies, is their monetary properties: inflation, deflation, and velocity. Doge is hyperinflationary. It has zero deflationary pressures. You can't collateralize it, so it has no velocity whatsoever. It's one, it's stagnant equity. Two, there's only one purpose for it: to sell it. You buy it to sell it. You can't do anything. It's functionless. It's useless. Payments are going to be monopolized by the countries, by sovereign fiat, and that's fine, whether it's a central bank digital currency or whatever they end up doing. It doesn't matter, and that's okay for them to monopolize the payment system, which I expect them to do. Um, they're going to they're going to. They have the status quo power and control, and they'll monopolize the payment system, but they won't monopolize monies, as in plural monies. There's all the reason in the world to not ever hold US dollars. Every metric about it says you can't hold it, actually. But what you're seeing here is, I argue, in all regards, are monies and currencies that have all the properties of monies. And what we started seeing in 17 and 18 was all of this. We started seeing, we saw with the ICOs, but that was pure inflation. It was literally the manifestation of an increasing supply instantaneously. And the same thing, so my narrative today applies back to 2017 and 18, as I fold, multiple years together into a single homogeneous presentation. Masternodes were pure inflation. That was a tragedy. Debasement of the supply. Bitcoin is disinflationary, meaning it's a decaying inflationary schedule. Less inflation over time. Stock to flow is totally applicable. The only thing better than disinflation is deflationary. Now, this is where really Curve comes in, and where Doge can fit in with networks like Flare. I actually think Curve has proven itself to be one of the most effective monetary policies in history. It's a hyperinflationary asset coupled with hyperdeflationary pressures. And the hyperinflation is used to incentivize participation in the network and encourage, it also facilitates the deflationary pressures. People need to consume Curve or lock Curve, reducing circulating supply in order to be exposed to incentivize yields derived from the hyperinflation. It's empirical at this point. Curve price goes up. The only reason it can go up in the face of hyperinflation is the extraordinary deflationary pressures disrupting circulating supply, effectively preventing the debasement of the value, where supply does not exceed demand, and in fact, demand is exceeding supply because supply is actually dwindling. So, Curve has proven in the face of hyperinflation, you could actually have a net deflationary currency. Holy crap! That's crazy, man. It really is. So Elon, I don't think he understands this picture that I've been describing. I just don't. Seriously. And that's okay. He's brilliant. I have my Tesla outside. I love what he does. Boring company, SpaceX, Tesla, brilliant. I can't wait to get the solar panels. Um, but that doesn't mean he knows everything. Nobody knows everything. I don't know everything. All I do is tell freaking stories. But the whole point is, if everyone tells stories, everyone has a capacity to share information and learn from everybody. So that's kind of what I do. I'm an aggregator. I listen to so many people. So my stories are a combination of a lot of people's stories. I love the contrarian ideology. I think if the system implodes, the first person I want to watch is Steven Van Meter. That boy is going to be the sportscaster for why and how it's happening. But I don't think it's going to implode. I think that it's pretty much up only for here, especially with uh, the macroeconomic the major indices looking the way they're looking. And I'll bring that up. Um, oh, the evergreen oil tanker. That's right, Jason. Picture it 10 times the size. Damien, F-gas makes dip buying expensive. Is placing trades during a sell-off cheaper and easier on Matic? Yeah, it's basically free. Matic transactions are basically a fraction of a penny. Um, Everything I'm doing right now is on Polygon. I'm not paying a couple $100 a transaction if I don't have to anymore. Dr. T's in the house. Hello, my brother. You have grown, man. In that Discord, what you're looking at, the stuff you're doing it right, my friend. Inch integration on Polygon announced? Wow. I mean, you come on, you guys see it. You got to see it at this point. I mean, just the there's so much liquidity on Polygon, and the monetary velocity is vertical, and this chart looks extraordinary. So Polygon denominated in Ethereum is in an ascending triangle. It looks solid. Once it breaks this price point, this is going to be interesting. So my eyes are here. I didn't buy or sell since last night. I'm just sitting in yield-bearing positions. And my narrative, the way I talk about how to attack the crypto space, um, it's real. Dollars are everything, and that has not changed with regard to how I present the best way to approach allocating value. But it has changed with regard to what you hold as principal. I don't think. Well, I have not been deploying dollars as principal because I think thinking in a longer time horizon at this point, and that's where macro financials come in. SPX, sorry, keyboard. SPX divided by M1. We have to go out to the monthly for the S&P 500. I mean, just the MACD, period. That's all you have to look at. You can look at price action all you want, but just look at this MACD chart. So in 2003, after the collapse in 2000, look at the final MACD rip to the upside on the monthly. And then it was up 78% from there, price point. And then in 2009, after the 2008 collapse, look at the MACD cross. I mean, that's a good 80, 90%, but up until 2020, that was 101% rip to the upside. So if you take that price point, that price appreciation, and you look at the MACD signal, does that, how is the world not talking about the MACD right now on this damn chart? This thing's gonna go. The indices are gonna go a couple X from here. But what's interesting more so is when you divide by M2. So this is why I say we're at a macroeconomic tipping point. Um, Either the system retraces, but this retrace from this high was a systemic event. So this fall was March 2020. So it didn't fall because of technical reasons. It fell because of a systemic event. So right now we're here and we have our dip. We had 2 months of dip here, a month of dip here, and now we have a dip now for the month. Either the system comes down or we're going to breach 2007 highs, which was also rejected here back in 2020. And if we breach those highs and we're at basically all-time high price points for these major indices, we're going to start redefining how to price these assets because it's not based on their P&E and their earnings reports and all that. It's different and it's changing, and that's okay. Systems are designed to change, and the second you think a system is not supposed to change, that's the worst position to be in. We always have to change the story. We have to redefine the narrative of how to look at these markets. Either the system goes down from here, as in like today, and it just starts to go down, resistance hits, it dips, and resistance holds, and then dips, and then resistance holds. Or 2007 highs are going to be taken out. The MACD is going to cross on the M1 denominated chart, and we're going to see bullishness for the next couple of years. And it's just going to keep ripping higher, higher, and higher until you're at twice the size of the S&P, 3 times the size of the S&P, and stuff like that. Let me hit the comments, and I want to talk about my narrative about how to attack the crypto space. Tried to dip by yesterday. Will cost me 400 on a 1K trade. Yeah, I spent probably like $800 on some trading yesterday. Relatively stupid stuff. I have no interest in trading on M1 on L1 Ethereum. No, I'm all on Polygon. I'm done with Ethereum at this point. You know, I could stomach 5, 6, 7, $800,000 a day in trading fees, but what's the point? You know, I got to my portfolio got to where it is doing that, and my fees.wtf website is ridiculous. It's like 400 grand worth of transaction fees. It's just disturbing to say the least. Polygon is a major shift. It's a major narrative shift because everything that BSC isn't, Polygon is. And that's a massive story. For more collateral assets, if I showed you my Aave, you'd all have your jaws on the floor. Collateral assets is everything. That's the way the legacy financial system works. That's the way, and that's the reason why this is different than 2017 and 18. You had monetary policy back in 17 and 18 that was basically inflationary, disinflationary, or hyperinflationary. Now you have protocols that have deflationary pressures and are net deflationary with incentive mechanisms and feedback loops to use inflation to facilitate deflationary pressures. Everything has changed. The assets have fundamentally different monetary properties. And that's just tantalizing and extraordinary once you start to quantify and compare the properties of one asset to another. It's not just different, it's very different. Jason feels like it's a part of a bigger scheme. That's what I like. Yeah, I mean, it's all related, and that's what I post on Twitter, obviously, shortly ago. Bank of England is saying they need to get a digital asset out ASAP because otherwise people are just going to start using USDC, GUSD, and Tether because carrying around paper in your pocket is stupid. You might as well carry around a fax machine, an 8-track, tape deck, Sony Walkman. Oh my God. I'm off fiat. The vast majority of my capital is not in fiat. I mean, sure, you can make the argument that the stable coins that I utilize are backed one-to-one by dollars in a bank account, but that's because I can't do shit with the dollars. I could do incredible things with the stable coins that are backed by dollars. They have the dollar value. They're $1 bills because they're equivalent to $1 and can be redeemed for $1. But what's the purpose of redeeming them for $1? The dollar bill is useless except for payments using the status quo, the entrenched payment system. Everyone accepts dollars. Great. Turn my stablecoin into $1 and pay someone. Doesn't mean there's really any use. There's no use case for dollars. It doesn't do anything. But I could collateralize digital dollars, stablecoins. I can collateralize. I could borrow against them. I can lend them. I could use them to provide liquidity to facilitate transactions, and people are going to pay me transaction fees. I can't do anything with dollar bills, but I could do so much with them in digital form. That's the deal. Let's keep it going. CMW Doge is inflationary, but it's not hyperinflationary. Yeah, but it's pretty damn ridiculously inflationary with zero deflationary pressures. It's inflationary enough that people spend and give away Doge, but it'll never hyper. Okay, that's not the point where I'm saying hyperinflate. You're thinking of the word hyperinflate in terms of like an uncontrolled spiral of hyperinflation where the inflation keeps going up. When I say hyperinflationary, I mean it has a freaking ridiculously large inflation rate. Stable inflation rate, but it's ridiculously large. So you could argue that it's probably better than the United States dollar. But the problem is there's no deflationary pressures, which means that inflation either you just see it in the price action. I mean, come on. This is the same thing that happened in 2017 and 2018. There's no deflationary pressures. I mean, look at this retrace. Jesus. Let's go to the 1 hour. I mean, it's basically at support flip resistance right now on a 38% dip. If it This is a descending triangle. If it breaches this to the downside, starts printing a lower low, it's a pretty bad position to be in, because there's more supply than demand. There's less people are buying, more people are selling. There's more assets than buyers. And every day there's more and more and more assets. Now, Flare could change this because it could introduce a deflationary pressure where people could collateralize their Doge to access the equity contained within. But that's not coming anytime soon. And even if it did, the vast majority of people, like 99.9% of the people buying Doge, don't understand the process of collateralization, debt management, and recurring revenue streams, stuff like that. So there's no saving this, in my opinion, right about now. The narrative can change over the years. And just like, and that's the best example of what Doge can be is like Curve, but Curve has the deflationary pressures right now, the circulating supply disruption right now. This is going to end lower in the short period of time. Damien, I think we're selling Elon short. I believe he bought Bitcoin as a proof of concept for Tesla's board. Now that the board has less ground to fight, Elon decides to take a treasury position in altcoins. Yeah, we could speculate on what wealthy people want to do with their money. It's all good. Robert's in the house. Always a pleasure. James, did you catch the 1 inch going to Polygon? Yeah, it's a big deal. I'm not too much of a fan of 1 inch nowadays. I think I don't want to operate on L1 Ethereum. It's nice to see they're going to Polygon. Their website's very heavyweight and it struggles in my browser, so it's very annoying. I've been using Maka more. But this is just perfectly consistent with everything I've been saying. The liquidity has flowed to Polygon, and now that's saying, hey, 1 inch went to BSC. They're going to Polygon next. Why? For the same exact reason every other platform is porting to Polygon as fast as possible. The liquidity, which means the opportunity. And once the protocols port, there goes the user base. Then the liquidity just flies through the roof. Then the monetary velocity engine starts, and then all of a sudden everyone's making a fortune on Polygon, and then that just keeps sucking in capital, more liquidity, more protocols, more monetary velocity, and it's just a positive feedback loop. So that's why I look for these properties of a nascent financial system. Kill us in the house, always a pleasure. Mickmon, is this the Bitcoin entry we've all been waiting for? Is it a temporary bearish? Um, I don't care about the price of Bitcoin anymore. That's the thing. What I care about is if it goes up, I borrow a certain amount of dollars and I'm making a certain salary. If Bitcoin goes down, I have to repay some dollars and I'm making less salary. It's a collateral asset. Changes how I'm using my portfolio. And over long enough time, everything's going to go up. So I'm starting to expand my time horizons and I'm holding less cash in the portfolio. All the cash in my portfolio right now is debt. I'm not holding cash because then I won't. I'm experimenting with this narrative at this point, and it's basically an evolution of my historic narratives. I speak highly of cash. It doesn't inflate nor deflate, meaning the value of it is basically fixed. Which means if I'm going to borrow cash, I'm going to use the cash, and I'm not going to take risks that jeopardizes my debt because I need the debt to reclaim my principal. So for me, collateral assets, Aave, MakerDAO, cash goes into Aave, Curve, Yearn, Convex Finance, and other stuff where it's cash. The cash is cash. The debt remains cash. So you don't take risk with your principal. Your principal is everything. And over time, you could accumulate more principal and just watch the collateralization ratio. If the markets dip and you have to repay some cash, you repay some cash and you do it quickly and promptly, responsibly, expeditiously. You do it quick. You take care of your capital. Your principal is precious. I mean, you really think Bitcoin is not going to be 100 grand? And I don't care how long. That's the point, and that's the narrative shift that has occurred for me. Let it go down to 20 grand. Let it go down to, I don't care. Because when it's 100 grand, I could borrow more dollars. And I could get 30, 40, 50% on those dollars. It goes down to 20 grand, I borrow less dollars. But I'm making money with the dollars. So this is a strategy. It's an evolution of the way I've been thinking. You want to protect your capital. And I've always said that. So that's the quantity of principal you have. And it's not the dollar denomination that counts. So in some regards, I can argue now that protecting your capital is literally not liquidating your principal. You're putting your principal numeric quantity at risk. The number of Bitcoins you have, the number of Ethereum you have, the number of Matic you have, because that's your power, especially as the market matures. Or can we really argue that Bitcoin in 3, 4, 5, 10 years is going to be less valuable, or that Ethereum is going to be less valuable, or that Matic is going to be less valuable considering literally what's going on right now? It's the craziest market I could think of right now. It's screaming explosion. So I don't care if it's down a day. I don't care if it's down a week. I either borrow less or more dollars to put to work so my salary on a weekly basis changes. Okay. Principal is workers. Those are your employees. QuickSwap is cool, OJJ. It doesn't fit my investment thesis, meaning I focus on principal and collateralizable assets and putting capital to work. So, like a USDC USDD pair on QuickSwap sounds good to me, which is what I've done here. So I have my dollars, my borrowed dollars on Sushi at the moment, and I'll show you guys. Oop. Did you catch the news? 1 inch. I talked on that. Killers, Mickmon, Wave Mappers, my man. Malcolm? I don't know what you mean, Powder Monkey. You think the bull market is finished? On the contrary, I don't think in terms of bull markets or bear markets anymore. I think in terms of principle and putting cash to work, debt to work. This is what the big banks do. This is what the corporations do, and that's what I'm going to sure as hell do. So this is diluting, and all that matters is, all right, if I could put my cash to work here, great. If I could put my cash to work on Curve or 1 inch, maybe there's an incentivized position. I'm going to put it to work as in an opportunistic way. I have capital, I have debt, and I'm going to find the best place for it to work so I could outperform the markets. And I'm starting to not think of my principle. It's a contrarian ideology. Almost everything I've ever done is contrarian. Every time that I've seen my portfolio go to a next level, it's because of a major shift in the way I look at the markets. And I think this is a good major shift. It's proven effective thus far. And we'll see how it plays out. I mean, this thing looks like it's going to absolutely collapse. Let's go back to Matic Ethereum. I showed you the M1 and the M2 charts for the S&P. Come on, look at this chart, guys. Wow. It's just hammering that price point. And look at that. It's a historic price point. It breaks through. Resistance flips support. That is from May 1st. That's a heck of a resistance to flip support, in my opinion. What do you use instead of 1 inch now? I use Quick Swap and Sushi Swap's picking up liquidity, so you get pretty good swap rates in some regards. But QuickSwap has the liquidity on Polygon, so that's what I use. On Ethereum, I'll use Maka or maybe Uniswap directly, but I'm not paying $200 transaction fees anymore. It's just not happening. I have the vast majority of my capital on Polygon. I have Bancor positions, but to remove some capital from Bancor, it was a $1,200 transaction last night. So I'm not doing it. I'm on Polygon. That's what I'm doing. Angelo in the house. Hey. Let's take a look at the markets. Let's see if they bumped. Ooh, 400 points. 390. I think that auto updated. Yeah, 392. So this looks solid. Looks solid. And here's a great place for cash to work. Otherwise, you could go back to Curve, which is that's 40% as well, which is nice that you get 11% on base. But I kind of want the Matic emissions. The only thing better than even compounding interest on your principal, your debt, um, is asymmetrically appreciating emissions. So here you're getting, um, and I'm pretty sure this includes like pool returns, swap fees. But the point is, these are incentivized emissions. I'm just getting more Matic and more and sushi, but this is freaking awesome, guys. I love this. This is the game that I'm playing. This is the story that I've expressed to everyone. I'm still a big fan of a volatile asset paired with USDC or USDT or a stable coin. And that's a great way to convert volatility into a revenue stream. Now, that's a way to minimize the downside, how to protect the downside. But that's the whole thing that I've begun to realize over enough time. Everything's going to inflate. Everything's going to change. And the downside is becoming less scary to me because if I could just make money on the downside and make money on the upside, why am I even thinking about the principal assets? The principal assets are just a vehicle to give me debt to run a business. I'm running the principal assets like a business. It's like a store or a house. You have a house, you borrow cash against it to buy another house. You're not thinking about whether the house goes up or down in value necessarily. I mean, sure, you could have systemic events, but throughout history, how many systemic events have we had in the last 20 years? Enter monthly. One, two, and this is the third. Am I going to run my portfolio based on the prediction that a systemic event is going to occur? And even if it occurs, what is that? November was when the collapse started. February '09. Well, it's over a year. Took a year for the collapse to regain strength. And here again in 2020, it started to collapse in the beginning of the year. And it didn't start the rise until May. Wow. So if anything, this chart says the Fed's going to monetize the debt and print the shit out of reserves, do the reserve shell game faster and faster. Look, it took them years to come back from 2000. It took them a year to come back from 2008. It took them 5 months for the market to start moving up from 2020. And they're just going to keep doing this game. And it's not going to cause structural inflation. We've seen that with bonds that are negative real rates. So what it's doing is it's debasing the currency, which is technically isn't driving up the value of equities. As you can see here, the value of equities, M1 denominator, is not going up. The value of equities is flat. So the only way the price point is going up is the dollars that give it that price are worth less. So what we're seeing is, so this gets into like macro talk from Stephen and a bunch of other folks that talk about Dan Tapiero. And is there actually inflation? And there isn't. It's debasement. They're just literally just bleeding the value of the U.S. dollar dry. Last couple of questions. I'm going to run so shut it down. FM says Pulse Chain will take pressure off ETH. Possibly. I don't know what it is, and whatever it is, it doesn't have critical mass liquidity. Were you safe in X token hack? Yes, I had no exposure to it. As of right now, I have little to no exposure to risk on assets. Polygon is no longer a risk on asset, it's a collateralizable asset. It's like 0.1% of the portfolio is still applied to X token, um, Mist, Method, and Visor. And oh, I was it Lix Elixir Finance. Yeah, I threw like this, but this is literally 0.00, a fraction of a percent of a portfolio. So I threw a couple dollars in here. Just saying, it's tiny, microscopic, because they're doing some stuff with NFT vault management. But it's just anytime you're thinking about applying capital to this market, your risk positions, unless it's a collateralizable asset, should be microscopic. 1% of the portfolio turns to 10% changes everything. 1% of the portfolio gets hammered, it doesn't hurt. So if you applied 1% of your portfolio to XTK and it got hammered, all right, it's 1%. The odds are the other stuff in the portfolio is up more than 1% that day. And if 1% goes to 10%, you just restructured the entirety of your portfolio. So people are taking too much risk. Assess your risk. Focus on collateralizable assets. Put your capital to work. Extend your time horizon. Protect your capital. Watch the downside. If you don't have a feel for the market yet, go risk off. Go to Aave and cash. If you're worrisome and you have anxiety, use stablecoin paired LP positions to protect the downside, and you'll be able to protect the value of your principal. And I've obviously evolved past protecting the value of the principal and focusing more on putting debt to work. So there's nothing wrong with the previous ideologies. It's part of the big picture, and it's a tool. It's a tool set. And it's probably still applicable to certain circumstances, depending on how I view the market. It's just that I'm viewing the market differently now. And obviously, if you're more advanced and you're heading in, you're just your view of the markets is evolving, and you're able to start to digest that the value of a Bitcoin, if it goes to 20 grand, and if you could say to yourself that it doesn't matter if it goes to 20 grand, that means you're starting to see it the way I'm seeing it. I could watch $1 million turn into $400,000 and not blink an eye. I just understand what I'm doing with the principle, and I know where things are heading in the future. So if you could stomach watching 100 grand that you've made and you're so proud of it turn to 40, then you could try a different narrative. But if you want that 100 grand to remain 100 grand, then you probably want to do volatile assets paired with USDC. You want to have downside protection, but you still want the recurring revenue stream. You want to capitalize on the volatility when it goes down and it goes back up. This is the beginning of this entire space. It'll go down and it'll go back up. That's the way these systems work. They operate intra-week waves, intra-year waves, and time horizon is a very difficult concept to really deploy effectively. Yeah, that was unfortunate for them. I really liked the XTK team. That was a great post-mortem, and I think they're heading in the right direction. I have no negative sentiment to the team. They've done well, and I think they will continue doing well. And I think they have a great opportunity, a great project, and a great protocol. And all we have to do from an investor standpoint is watch your risk. If you lost 1% of your cash, or 50, half of 1% because the XTK asset bled out a bit, all right. We're expecting them to do big things. This is a massive, massive tech and functionality that they are building, and that's really cool. And you don't see a lot of teams like this that have the transparency that they do, and how they've executed thus far. They got some serious products. Like the PowerPool team got serious products. but I see too much opportunity cost or too much risk. So I'm focusing on my vast majority of the portfolio is Bitcoin, Ethereum, and Matic at this point. And I'm borrowing cash. And as you can see here, I'm making like $300-400 a day, and that's here. And then I have the Aave position, which is another $300-400 a day, and that's just day in day out. And the principal will go up and down, but the cash flow is still the same. Excuse me. All right, so I haven't been on office hours, but I got new coupon codes for office hours where I could give people free time. So I'm going to put some stuff up on Twitter and do some little contests where I could get people to tell me what they think of the markets, or try and see how much education I've effectively deployed over the last year. And I'll give away some free time, and I'm happy to talk to people about the portfolio and any topic they want to discuss. And obviously the Discord's on fire. We got a heck of a team, a heck of a group of people. I'm so proud of everyone that's really been thinking about the markets differently. And it doesn't matter. You don't have to subscribe to everything I say, but you have to communicate. You have to ask questions. And the most important person to ask questions to is yourself, and to think about these markets differently. That's the only way to head in the right direction. 12:09 p.m. on a Thursday, May 13th. As always, 49 people in the stream, 20 likes. We can do better. Tell everyone to subscribe. Thank you for joining, and I'll see you tomorrow. Peace.